This week, five earnings reports told one story. From both ends of the AI boom, the companies that make memory chips just posted the most profitable quarters in their history, and the tech giants that buy those chips kept spending. Here's what happened and why it matters. First, the setup. Artificial intelligence runs on memory, the chips that store data inside servers. Right now, demand is far outrunning supply, and the shortage is expected to last into 2028. Prices have soared, and that's a windfall for the three companies that dominate memory: Samsung, SK Hynix, and Micron. Start with Samsung. It posted an all-time record, about $60 billion in operating profit in a single quarter, roughly 18 times more than a year ago. Almost all of it came from its chip division. And here's the strategic shift. Samsung is now locking 60 to 70% of its memory capacity into long-term, fixed-price contracts, turning a boom-and-bust business into steady, guaranteed revenue. Next, SK Hynix, the leader in the high-bandwidth memory that AI chips depend on. It delivered a 76% operating margin, the most profitable quarter in memory history. But here's the twist. The stock actually fell about 10%. Why? Expectations were priced for perfection, and half its sales are now locked into long-term deals, trading peak upside for stability. Now the other side, the buyers. Google's parent, Alphabet, grew its cloud business 82%, with more than $500 billion of demand already booked. Demand clearly wasn't the problem. Yet the stock dropped about 15% because Google is spending even more to build AI data centers and warned that spending climbs higher next year. And Alphabet wasn't alone. Microsoft and Amazon reported the same week. Microsoft's Azure cloud grew 43% and crossed $100 billion in annual revenue. Amazon's cloud grew almost 37%, its fastest in over 4 years. All three are accelerating. And together, these giants will spend more than $600 billion this year alone, with even more coming in 2027. Here's the detail that ties it all together. When Amazon raised its spending forecast to around $220 billion, it pointed to one reason by name: higher memory costs. That's the shortage showing up directly on the buyer's bill. The chipmaker's pricing power is now visible in the tech giants' budgets. So what does it all mean? The memory shortage is real, and it's structural. New factories take about 3 years to build. The makers are locking their best supply to the biggest buyers, and demand just keeps climbing. The takeaway is simple. This is a multi-year cycle, not a one-quarter spike. And the companies with supply hold the power. That's the week in AI and memory. For more clear breakdowns of where the money is really moving, follow tkal.news.